elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
Welcome back to the channel, Goofy Investing, where we talk about investing in the stock market. All right, this is going to be a Patreon promotional, sneaky 2-for-1 for the weekend. I got a request on this actual stock, so I've done the analysis. I've done the quant, looked at the investment proposition. We're going to be talking about a robotics company here. All right, ticker is RR, Ridge Tech Robotics. Trades on the NASDAQ for $3.74. Market cap is $741.78 million. This robotics company is headquartered in Las Vegas, Nevada. Let's look at some financials, and then we'll talk about the business model. Then we'll look at some anomalies that I've actually sniffed out on the 10K and what that means for this investment. All right, so cash and cash equivalents, well capitalized, strong balance sheet. All right, this is a company that does have sales. Cash right now is $85.51 million. The market cap is $741.78 million. So their enterprise value is $656 million. $657 million on a rounding error, as they have 0.99 right there. All right. So enterprise value, once again, to reiterate, for those new to the show, okay, it's pretty much your market cap subtracting your cash in addition to the debt, and that's what comes up with your enterprise value, also known as EV on an actual metric. So let's look at the actual financials on the income statement. Posting of revenue decline here. It looked like they did 8.8 mil in sales in 2023. In 2024, they did 4.2 mil. So over 50% decline in sales year over year there. And then trailing, they got a 4.1 mil. So they may post moderate growth of sales to end out the year. All right. SG&A is going up. Other operating expenses is going up. R&D remains to be flat-ish. Let's go down here to look at weighted average shares outstanding. Basic weighted average shares outstanding versus diluted weighted average shares outstanding. They're the same. So that's something that I like to see, especially with these emerging companies. All right. And an emerging company it is. Okay. It looks like they IPO'd here in, let me see here. They IPO'd here in 2023, move into the stock price action. They did their IPO, saw that decline, that IPO hype rocket up, and then in tradition, in keeping with the IPO price action, stock cratered down into below $1 a share, into 50, 60 cents a share at the lows. All right. So let's talk about the business model on their robots. Okay. So they provide robots that are powered by LiDAR and some other visual cameras. All right. And they pretty much have different segments that their robots actually conduct work in. All right. So they have the hospitality segment where, you have the bartender robot, and then you have the kitchen robot. And these actual robots, of course, they're going to be in bars and kitchens and restaurants and so forth. And then you have your cleaning segment robot where they have they actually sweep the floor and so forth. And I believe I've seen some of these type of robots. This floor cleaning robot, as you see right here. I believe I've seen these in some major retail stores such as Walmart, Target, etc. And they seem pretty cool. All right. Now, they do have intellectual property of patents pending. They have 3 published patents here for their intellectual property. I would have been more impressed to see utility patent to accommodate, but okay, it's going to be hard to get that in the robotics sphere. All right. I think that they, with their new launch with the Titan, this robot right here is more so deployed in auto manufacturing. It can carry up to 300 pounds. That doesn't say this in the actual slide deck right here, but I've done some more research on their 10K. It has a 300-pound capacity of movement. Looking at the robot, I don't know, if you're going to fit that many pieces onto that specific platform that weighs 300 pounds. Maybe a small item that weighs a lot of weight, like 200, 250 pounds, may be more of the hot tip. All right. And the most productivity performance that the robot can give. All right. So that's promising. All right. So here's your competitive landscape. And they got your kitchen like we talked about, logistics and delivery. This is more of a robot that organizes things and maybe has a little tray platform where you can move minor stuff. You have your medical delivery where maybe the perhaps the robot is tailored for refrigerants to carry immunizations, or maybe not. Okay, maybe there's just uh, like an enclosed, secure portion where it just carries some medical items. All right. And then it travels across the hospital. That's pretty cool. We got the bar and barista, and then you have your service busing. This is a robot that can move around, sell you snacks, and so forth. And then we talked about those floor cleaner robots. So all in all, I like the diversification of the portfolio with these robots and their product offering. They've launched over 400 locations all throughout the US, so they are battle tested. I do question the amount of sales that they're doing with these robots. I'm tracking a majority of these robots are leased out. Okay. So that's something to consider. When they're leased out, when these robots are leased out, it's high margin. We'll go to the profitability metrics, and you got a 76% gross margin. When they're selling the robots, I worry that if they get into more manufacturing and distribution and selling the robots whole, I'm worried this gross margin will decline. But all in all, I mean, the actual product offering against the TAM, I'm okay with it. All right. With a low gross margin, I assess that the use case for this business model has a wide TAM. All right. Um, that's pretty much it with the investor slide deck. Now let's talk about dual class of shares. We'll go to balance sheet, or I'm sorry, we'll go to the 10K. All right, 10K analysis. They do have a dual class structure of shares. I've read through this. The Class A shares have a 10-1 vote, and they're primarily held by the owners. All right, the actual founders, CEO, etc. All right. And the problem with this dual class share structure is they're going to have problems uplisting in indices, in indexes. Okay, so I'm talking S&P 500, Russell 2000, mid caps, all the S&Ps, your big upgraded indice opportunities are going to be limited with this company. Me personally, that's kind of a deal breaker for me. Not always, but for the most part, that's a deal breaker for me. Indice prestige is very important to me, and so forth. But let's talk about the ownership. Moving on to ownership. All right. Insider ownership's 21.78%. I honestly think this is the sweet spot. 20-30% is really where I like to see insider ownership with up and coming companies that are at this business phase of their cycle. Institutional ownership is at 9.78%. I've done some research. I'm tracking that BlackRock just purchased a decent stake last year. Here's the filing for it. BlackRock decided to come in and scoop a bunch of shares. They own 4.4% of this 9.78%. With the dual class structure of ownership and BlackRock coming in, all right. See, BlackRock, they're not necessarily about profits. BlackRock is more about power, all right. So with that, more dissecting on the actual more dissecting of the research that I've conducted on insider ownership. Um, Notice insiders have bought, these two insiders, the CEO and so forth, have bought shares, but it says zero. We'll look at the filing. These are actual conversions from Class A to Class B shares. So we're seeing some conversion and giving up some aspect of power. And this may have been a conversation between the CEO and maybe a rep from BlackRock and so forth to make the equity more investable, if you will. Here's your actual directors, which the CEO and founder can pretty much outvote all these guys and all the actual shareholders. So they're there kind of as puppet heads. Yeah, they got suits, they look sophisticated, but they're really there for puppet heads via their IPO and representation to the common shareholders on the market. All right. So there's that to consider. Um, what do I think? Do I think that this is a good investment? I'll give you a price target in two. I'll give you two different price targets for 5 years out, and they're going to be conditional on certain things. All right. So earnings consensus estimates, they got them growing 146%, but to 12.10 million. Remember, this company is trading over 741 million right now. So my basic rule or guideline, and not always a deal breaker, okay, is I ask myself the question, if I buy the company at 740 million, can they revenue the market cap that I'm buying it at in 5 years? If they have superior margins, business model, epic financials, I'll lower the threshold. I'll say, okay, can they revenue and grow sales up to half the market cap? Okay, and these are conditions that I look at. All right, I don't think that they can do it. So, I mean, analyst consensus estimates got them growing 37% the year after. So if they grow 150% next year, and then they grow 100% the year after, and then they CAGR sales of 50% going out 5 years, and then they project and continue to hold a CAGR out to 50% going out for several years with consensus analyst estimates, which take for a grain of salt. There's only two here. All right. I think the stock in 5 years is $10. All right. And that's reaching. So there's nothing stopping this equity from getting a revision downward, a downward revision from the street. Right now, there is a lot of interest in robotics in the market. So a lot of these robotics companies are garnering premiums. I'll be transparent. A lot of them probably don't deserve those premiums. And I'll be even more transparent. I don't think this company deserves that premium. All right. There's nothing stopping this equity from going below $1 a share. They can get a re-rating, the market momentum and sentiment can flip on a dime. This thing can crash down back into sub $1. Maybe they go to maybe 80, 90 cents a share. And this is really risky. This is a really risky investment. Me personally, it's not for me. There's too much downside risk and not enough upside risk for me to be interested. Also, the dual class shares really is a big turnoff. Yeah, albeit there is some conversion from the Class A shares to the Class B shares from management, from the founder, and some BlackRock coming in and taking a stake. So the balance of power is shifting to be more balanced. But all in all, it's still a deal breaker for me. All right. So that one situation, going back to the price target as I digress, if they can CAGR 50% for if they could do their 140%, and then they can do 100% the year after, and then level out at 50% growth for the next 10 years, it's going to be a $10 stock in 5 years. If not, I got the equity at around right where probably where it's trading at, maybe $3 Maybe they raise more capital in between the 5 years. They balance out ownership and dual class structure. There's also an intent for them to do preferred shares, which will put more pressure on their EPS. So I believe that if they execute their actual preferred shares within the 5 year timeline, equity is probably going to be at $2 a share in 5 years. Me personally, long term, I don't think that this is a good investment. Yeah, they got cool, fancy robots and a business model, but as far as the actual investment proposition, I don't see it. All right. I hope I'm wrong. I hope they're $10 a share in 5 years and they, everybody's taken care of and they grow sales that much. But all in all, I've been around too long to see a lot of these companies and gone through a lot of these companies and situations. I know that's not what a lot of people like to hear. You know me, I'm always going to keep it real. If you got value out of this video, like and subscribe. Quick plug for the Patreon. Check it out. I'm constantly on there. I'm constantly putting out exclusive content to my members. You get development, benefit off community, more direct access to me. All right. You get the latest and greatest. I pop in randomly all the time on there. $10 a month. I got a free trial running that'll expire at the end of November. Check out the free trial. If you don't like it at the end of the 7 days, cancel the subscription and then move on. All right. Got nothing to lose. All right. But a lot to gain, probably. All right. So I love y'all. Thank you all for your support. And until the next time, take it easy.